Hi, welcome to this video, David. It's on the 16th of November. It's Saturday. Just going to give our updated outlook and forecast for the Japanese yen today. We're going to be looking at it against the USD, the euro, and the Canadian dollar. We'll go over the charts in just a moment. Now, in terms of the Japanese yen, really interested in yen longs at the moment because what is going on generally in financial markets. Now, last week in particular, great week for global stock markets, many indices, new multi-year highs, a lot of talk about risk on in the markets. Now, in terms of if we look at stock markets, obviously very bullish price action, but it's very unhealthy price action. I'll come to why when I discuss the trade setups. But if we look at the Forex markets, there isn't really that much risk on, is there? I mean, you don't really have risk currencies powering higher on safe currencies at all, which they should be doing traditionally. The correlation is breaking down. If we take the yen, which is the number one safe haven currency in terms of the three pairs that we're going to look at in a moment, the yen is actually stronger, not weaker on the week, which points, in our view, to a big turn in the yen. I don't think, stock markets going grinding higher is really going to hurt the yen too much, but the probability now, in my view, is for a reasonable correction in global stock markets. Of course, yes, stock markets are just really bubbles. They could crash, but we don't know when that is going to come. It will come eventually, but a reasonable correction is certainly on the cards. And if we do correct to the downside in stocks, the yen will have a big move to the upside. It's deeply oversold. Right, what we'll do is we'll go to the charts and discuss all this in more detail, but please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the three we're going to look at right now, you can get live access to our member center on the link beneath this video. Now, in terms of just before we go and look at the Forex pairs, what I want to do is just look at what's going on in stock markets. I'm just going to look at the S&P 500 because, what is going on here really is reinforcing our yen bullish view. So, right, S&P 500 chart. We're going to look at the S&P weekly chart, which I've got here, and the daily chart. I just want to go through why this rally in the S&P, we're very vulnerable to a reasonable correction. Of course, like I said earlier, we could crash, but a reasonable correction is on the cards, which is really going to help the yen in our view. And even if we don't fall significantly, the yen is still going to firm. Now, in terms of this rally from here, 22%, it's against the backdrop of a slowing global economy, yet the market has rallied. Got trade wars in the mix, okay? And the reason the market has rallies up strongly every time there's enthusiasm or optimism about trade wars being solved. And this guy here does a really good quote, Matthew Malley of Miller Tabak. We're finally close to a trade deal with China, according to several senior members of the Trump administration. Wait a minute, wasn't that what they said a week ago, 2 weeks ago, 3 weeks ago? In fact, isn't that what they said about a much bigger deal back in late April? We seriously question sustainability of this kind of rally. Got enthusiasm about trade wars being solved here. Up we go. Little bit dip. There's pessimism. Trump advisors say everything is good. Up we go. Bit of pessimism. Trump advisors say all is good. Yeah, you get the general picture now. For 3 weeks on the trot, you've got new multi-year highs, but no heavy volume supporting the rally. That is very dangerous. Okay, I just want to go through why it's dangerous. We'll just shift over to the daily chart. There's no broad-based enthusiasm for this rally. Okay, and what I mean by that is, a lot of hedge funds are on the sidelines, a lot of mutual funds are on the sidelines. Volumes are very, very low. If you look back at stock market rallies throughout history, they're supported by heavy volumes, rising volumes, or low volumes, or declining volumes. And just to give you an idea of the volumes, average daily trading volume in the S&P 500 over the last 90 days It's at a 10 or near a 10-year low. It's gone down to 7% of total market capitalization in the last 3 months. Just 7% versus 21% average volume between 2010 and 2013. Down from 21 to 7. And yeah, the market looks really bullish, but no big volumes. Now, what traders are in there driving the rally? Well, you've got algorithmic investment funds, they're pretty big. Also passive investment funds and high frequency traders. So basically what you've got, particularly these algorithmic funds and high frequency traders, massively leveraged. And yeah, that is just so dangerous. Okay, there's no really big bank liquidity like there was before 2008. Yeah, you can see that bid and ask spread for the average S&P 500 stock close to multi-year highs. Yeah, so you've got basically, highly leveraged funds just responding, let's say, to, oh, there's optimism about trade wars and throwing in big orders. Okay, that is very, very dangerous. You've seen it in forex markets, the kind of danger these heavily leveraged algorithmic funds are. They throw in a big order in a forex pair and then it can't be met on the other side and you get your flash crash or whatever. If this rally breaks, it could break very, very hard. Okay, in terms of low volume rallies, they're always dangerous, and when they break, they really break hard, and it's a domino effect to the downside. And I think you may not get a crash in stock markets just yet. I think one's coming, but certainly we're going to get a healthy correction, which in our view will help the yen. So right, let's go and look at the yen, and we're going to start first of all with USDJPY. Right, USDJPY daily chart first of our 3 pairs. Now, in terms of up here, we're pretty bearish for a big breakdown in USDJPY. I put the target as chart lows on the daily chart, which we're looking at. I'm not doing the weekly chart in this video, but I think we could get down as far as the par level 100. We're near enough at 109. So if we do break lower, a lot of downside potential. And the way the price action looks to me doesn't look particularly bullish of the USD. In terms of what I mean by that is we push up to come through the 109 level here, get rejected, just small candles, low volatility, rejected, big red, can't take out 108, back towards 109, it's laboured down and a little bit of a blue candle on Friday. So the USD isn't really getting any traction to the upside, and the volatility is pretty low, and there's a significant level of resistance which is there. My line straight, there we go. This candle here, pointed it out before when talking about the yen in videos. It's a really heavy volume institutional portfolio readjustment candle. It's going to take a lot to get through the top of that candle, and so far we have failed. Of course we could, okay, but at the minute I just personally feel we're not going to really motor to the upside. Okay, now in terms of Friday's rally looks pretty limp to me, and really just draw the trajectory in, just kind of come back to poke it. Of course we could go higher. If we went up towards 109, you could always sell back through the level on a rally failure. Okay, but I think a good level to come in my view, would be this one. Sorry, 108. Oh, sorry, I keep skewing my lines around. Big red there to try and take out the level. Can't. Little poke through, back up. I think if this level gives way now, though, give it a bit of room through the 108 levels. Don't sell just below 108. Go 107.80. Get clear of the turbulence, so to speak. And I think if we do break down, you'll get higher volatility. Okay, and we should quickly go down to 105. And obviously, like I said, yeah, 100 possibly. The price action for me, no real conviction yet in the dollar to the upside over the last few weeks. So looking for a breakdown, and basically the volatility to increase. 3 weeks, stock markets each week new multi-year high. Dollar can't break higher. If stock markets do stay strong, well, don't see much upside in the USD. But if they break, and I think, well, I said it earlier, we're due a decent correction off to the downside, and it could be a nice move. Now, I'm going to move on to the next two pairs. I'm going to do Euro JPY next, which I really like the look of as well. I like the look of all three pairs actually, but I do like the look of Euro JPY. Let's go and take a look at it. Euro JPY daily chart just for the last two pairs. I'm going to use the charts from our member center now. In terms of this pair, regular viewers know over the last, well over a year, I favoured selling the euro. The euro's come down really nicely over the last year or so. This, though, is the biggest rally that it's had. And to see the rally as a clear sell, 121 is really tough resistance to take out. I've done two trend lines, 121, 121.30. It just really hard to get through these trend lines. Come down, get a bit of a rally on Friday, could break above this nearby resistance, but these two levels hard to take out. You could just sell on any topping action, or just simply I would sell if we don't rally back through the 120 level. Just a long way to go on the downside. I've got obviously the daily chart here only, which is 116, where I think we could get down to. But long term, I'm looking for 100. Just nothing good going on in Eurozone. Stock markets can go up or go down, but I think the Euro's going down regardless. Just so many problems in Eurozone. As a long-term position trade, I really like the look of this pair. And over the last year or so, I've done well out of the pair in the period, and I'm hoping this trade is going to do well for us as well. We shall see. Right, let's shift on now to our last pair we're going to look at, which is CAD. All right, CADJPY, last pair. Now, in terms of the CAD, I've done the videos on it generally. It's the most overbought major of all. It is going down on numerous other major currencies in our view, and we've sold it on a few. And we've done quite well in some of the trades that we've done, and some not doing much at all. This one falls into the not much at all at the moment. We're in at 82.65, we're at 82.25, so just a nothing profit so far. What I like about this pair, I'm pretty bearish of it longer term. You can see I've got my daily support level in there at 79, which I think we're going to get to, but longer term I think we're going to 17. What I really like about the pair is the way we power up here and we get through the 83 level, which was previous resistance. Now, we could see on the COT Net Traders report that here, when we break the 83 level, the commercial, the smart money hedgers increase their selling as speculators increase their buying. The speculators can't push her too far away from the 83 level. We slump back through on this red, break through support, down, then we come back to test it. It's resistance now, obviously. 1 candle, 2, 3, 4, bash into the 83 level, can't take it out, then we go down, and now we're coming back a bit. It's going to be hard because speculators are so long. I just don't think they've got the buying power to push us up to new highs, and obviously the commercials against them. Okay, how would you play this pair? We get up towards the 83 level. If we do rally, just sell any bearish price action. Okay, if we were to get through the 83 level, for a fresh position, I'll just wait for the 83 level to give way, look for the breakout to fail. Okay, but we may not push higher. We could. What if we don't push higher? Just sell her immediately back through the next round number 82. Yeah, long way to go to the downside. 79, then possibly 70 longer term. CAD overbought everywhere, very vulnerable to a big correction to the downside. And also keep in mind that CAD is a real risk proxy currency, so it should really be motoring higher with the strength we've seen in stock markets. But it did motor higher, failed. I just don't see much upside. Of course, could prove me wrong, but I like the look of this trade from a risk to reward standpoint. Long way to go to the downside in my view. Now, in terms of the three pairs, they all look good to us. If you can't decide which is the best, and we very often do this, I mention it frequently, we're just universally bullish of the yen. So we decide the risk we're going to take and just divide our trade or our risk between, let's say, three trades that we've looked at here. Won't get the best or we won't get the worst, okay, in terms of hopefully profit potential. Very often find when I'm universally bullish of a currency or bearish, the one that I pick out, if I just pick one, it's the one that doesn't move that much, or there's one that moves better. So just dividing your risk between three trades or few trades sometimes I think is a good way of trading. Okay, but for me, yen, hoping to see some decent strength in the coming week. We shall see, of course. But that's the video for today. Thank you very much for watching me as usual. Take care. Have a good day.